There you go. Good old unmute. Mute. Anyway, hello, my name's Jonathan Swift, the Content Director of Insurance Post, and welcome to the last session of day one of the Insurance Post Claims and Fraud Summit, the Desperation Effect preparing for a rise in customer claims as a result of COVID-induced economic downturn. As the economy scrambles to recover from the coronavirus pandemic and ensuing lockdowns, in this session we'll be looking at what are the ongoing and anticipated challenges for claims and fraud teams in both keeping up a high level of customer care while remaining vigilant to the ever-present challenge of fraud. And can we look at previous economic downturns such as 2008-9 to prepare for, or will there be different challenges this time around? Now I'm delighted to say, joining me for today's session, we have Scott Clayton, Head of Claims Fraud at Zurich, Stephen Dalton, the Head of Intelligence and Investigations at the Insurance Fraud Bureau, and Martin Stockdale, a Partner and Head of Fraud at Kennedy's Law. Welcome, gentlemen. Now, this is an interactive session, so I'd love you to get involved, and you can do this by posing a question to the panel by using the chat function on your screen. If you get your thingy caps on, and we'll come to these questions later on in the session. Now, to kick off with, and I'll come to you on this first of all, Stephen, can I ask, quite simply, can we expect a significant rise in fraudulent claims as a result of the economic downturn?
Well, good afternoon, Jonathan. Thanks for inviting me today. I think previous experience would suggest that's a yes. ABI fraud stats from the last recession, the 2008 one, suggested that there was an increase in detected claims fraud of something like 17%. University of Portsmouth have done a number of studies looking at increasing in fraud offences across the board compared to economic recessions. The 1980, 90, 2008 ones all saw increases in fraud detection. Given the significant impact of COVID, obviously back in April we were looking at a minus 20% GDP. Although that's recovered somewhat, we're still way out there in terms of the impact of this recession being the most significant in living memory. So that would suggest that we would be seeing an increase in fraud. And there's a number of academic studies suggesting that there is a relationship between recession and crime. Although it is always worth noting that some of those studies identify multiple causational factors for crime and fraud. So it's not, we need to apply a little bit of caution rather than simply saying that any increase, any recession will drive an increase in fraud. It may well be that the fact that we think about this means that there's more awareness and more scrutiny of what's going on. I mean, certainly we've been talking to insurers. We've adapted our strategic threat assessment model and are now providing a rolling quarterly strategic threat assessment where we're asking insurers to contribute to that on a quarterly basis. And the first one of those was published in September. And what insurers were telling us then, looking at the second quarter, was that there was actually a significant reduction in activity, not only in terms of genuine business, but also in suspected fraud cases during that first period of lockdown, albeit a higher proportion of cases was subject to further analysis, which kind of backs up that point about greater levels of scrutiny. Perhaps, I mean, having said all that, given the unprecedented nature of the dislocation and disruption to the economy caused by COVID, obviously the full impact of that we haven't yet seen. The furlough system remains in place, albeit slightly reduced. Most insurers are certainly reporting to us that they expect to see significant increases across the board in both fraud types and in all the different business lines. But they're also saying that this is very much the calm before the storm, that they're expecting things to get much worse over the next quarter at least.
So Martin, I expect you probably agree with what Stephen said there. I mean, perhaps you could offer some comment on that, but also perhaps comment on what trends we might be expecting as a result of this.
I absolutely do agree with Stephen. I think that history dictates to us that what we'll start to see is increased incentive, increased rationalisation, and increased pressure on individuals, which will all drive people to behaviours that perhaps they have not historically felt the need to indulge themselves in. And I think that is part and parcel of I think probably I always look at life from a third party perspective, because it's the area that we exist in most as a legal supplier to the insurance industry. But actually, I think the customer fraud problem is going to increase significantly, as well as people look for revenue or financial benefit wherever they can find it. In terms of the specific trends, I can certainly see people are taking genuine losses and exaggerating them. That's always the go-to. Trying to maximize the benefit from an unfortunate event is an easy one, because half of the job is done for them. They don't have to. They're only manufacturing half of, or falsifying half of the problem, if you like, rather than the whole thing. But I can certainly see people looking for opportunities within insurance products and claims lines, and trying to take advantage of that. I can see as well enablers of fraud coming into the space of into first-party space. We're already starting to see that with loss assessors coming into the market to try and help professionalize the approach of bringing first-party claims against insurers, and that's certainly a space where our clients are talking to us at the moment. And with the general, I think, breadth of impact of COVID across the entire country, and therefore the entirety of the economy, we're starting to see enablers move into other areas. So business interruption claims are already starting to come through. Organizations are already leaflet dropping in on businesses that are shut, and you start to sort of see the impact coming through. People are not even waiting for the obviously high-profile case in the Supreme Court at the moment. They're already doing that, and that will only trigger people's expectations that there may be a claim to be made if the headlines, doesn't even need to be the detail, but if the headlines support that there is a claim opportunity there.
Scott.
So I'll try and come at this from a bit of a different angle. The difference that a recession makes, or a change in the economic climate, is it drives some people to commit fraud that otherwise wouldn't even think about it. And that's where the desperation comes in. You've got businesses and individuals who are suffering more than they ever have done, and fraud, a fraudulent insurance claim may be the only way out. The other thing that we have to consider is the exploitation angle. And I read with interest the other day that the banks who are in effect facilitating the government-backed loan scheme have identified something in the region of 26,000 fraudulent loan applications for people who are, obviously trying to obtain emergency loan. And when you delve a little bit deeper into that, these are individuals who are reinvigorating dormant companies, who are stealing people's identities and setting up companies with the sole purpose of using those companies' identities to take advantage of the government loan scheme. So they also reckon that there's something to the tune of 20 odd billion pounds worth of loans that the banks are providing. Now, they've got no risk in this because it's government backed, that will never be repaid. So that's a scheme that is, has been set up to try and help people in desperate circumstances, but it's being exploited by criminals and opportunists who can obtain £50,000 if they pass the various tests from the bank. So we should be under no illusions that our industry is ripe for fraudulent claims, and the quickest access route in is through first party. So people with a contract of insurance can claim, whether it's property, whether it's motor, whether it's a car that's failed its MOT and they can't afford the finance payments, whether it's the loss of the engagement ring, the damage to the television, or even, in more extreme cases, fires to businesses and escape of water. We are absolutely on our guard because, given what's happening out there, it's just inevitable that we're going to see an increase across most of our product lines.
I mean, you could have answered my next question there, Scott, which is really about what business lines are we expecting to see perhaps major issues and problems. From what you said, that it's all of them.
Yeah, and I think you just have to look at the motivating factor. We sometimes view people who are significantly wealthy, who are running successful businesses, as the type of people who would never commit fraud. These people may well be asset rich, cash poor, and funding and trying to survive in businesses that are either connected to the retail sector, the leisure sector, or businesses that have been holding significant amounts of stock that they can't shift and sell. You've got lockdown restrictions that are putting some real strain. So the first party property area is undoubtedly one that we are paying close attention to. In terms of Martin's comments around third party, I think people expected to see an influx of claims, from third party in the motor ELPL side of things. The reality is that, COVID specific claims have been relatively few and far between. And that's where, going back to Stephen's point, the quiet before the storm, we still believe that people are still trying to almost find their feet, work out the line of attack. And some of the professional enablers, and let's say those that are at the dark end of pursuing fraudulent claims, they've had businesses affected in the same way as many, with lockdown restrictions, having to have people work from home, etc. Some would say that the gravy train has had a few bumps in the track because they didn't expect this to happen. So there is an element of let's wait and see. But again, we're under no illusions that I think it's only a matter of time before we start seeing the spikes.
Yeah, I'd echo Scott's comments there in terms of what insurers are saying to us around there's a significant expectation around opportunistic fraud in terms of exaggeration of genuine losses or complete fabrication or contriving incidents around claims across the motor and property spectrums and into potentially into liability. From an insurance application perspective, there's an expectation of increased first party fraud risk. Misrepresentation on application fraud within motor policies has been flagged as an area of concern. The disruption and dislocation of this will clearly create opportunities for organised criminals to exploit the vulnerable and the desperate, get them involved in activities that they wouldn't normally get involved with. There's certainly a suggestion from insurers that professional enablers, they're seeing an increase in claims farming and acting without instruction, even though there was a general sort of steadiness of trend within that second quarter. There was an increase in expectation of acting without instruction being fueled by claims farming activity, and certainly OCGs getting people involved in once we get out of this second lockdown induced or staged crash for catch incidents as well. Aside from the ghost broking issue of people seeking to get deals and getting sucked into sort of getting effectively a policy that's worth nothing to them at all through using a ghost broker.
Martin.
Yeah, I'd agree with that. And picking up on the third parties place as well, I can start to see organisations like claims farming organisations, claims management companies starting to kind of do cold case reviews, if you like, those cases that they didn't manage to get off the ground initially, representing those, putting them back in the sort of older claims and their book of untapped resource, if you like. We can start to see that to happen. We can start to see people being made redundant from their jobs, and the employer-employee relationship that will have previously maybe prevented a claim being positioned before being made in the first place will now come, because they've now got no reason not to. And with that, I can also see in the first party space the same happening, that same sort of legacy losses perhaps that haven't been claimed for, a damaged item that they couldn't be bothered with before because they didn't need to. Now was only damaged last week rather than last year, and starting to sort of recover damages for that. Anything that looks as an angle where they can present or misrepresent a situation, because that's the route through to receiving financial gain. We'll start to see it all, and probably from every line of business. I think from the insurer's perspective, where the insurance industry is now in 2020 in a counter fraud response, how many different lines of business and claims teams that insurers are now established in from a fraud perspective compared to previous recessions, will also make those insurers more resilient, aware and ready as well. So fraud detection, we always look at how fraud detection is improving because awareness is improving, and that will also feed into, I think, the fraud stats that inevitably come out of this period.
Touching on that point, Martin, I mean, do you think that in a way this downturn might be different to previous ones, referencing, I suppose, 08, 09, as we did in the introduction? And are there any lessons we can take from previous economic downturns to prepare us for, if there is a significant rise in claims, which is anticipated, it seems?
I think the insurance industry, like many other industries, is always learning. I don't think it's necessarily that we have to cast our mind all the way back to a specific economic period, if you like, for ideas of what may happen. I think we constantly learn on our experience, and I think one of the things that that I certainly have learned is that the fraudster is always ever vigilant and aware of new opportunities. So, counter fraud world is always been like whack-a-mole. We address a problem where we see it and it pops up somewhere else, and we displace fraudulent activity all the time by way of counter fraud response. And I think that's certainly something that will happen here. And as I said before, I think just the pervasive nature of the impact of COVID-19 on all of us is there, that makes every line of business, every insurance product susceptible here for abuse.
Scott.
Yeah, it's strange because I think in some ways it's easier to commit fraud in certain scenarios than it was 10 or 11 years ago, and in some ways it's more difficult. So, if you look at some of the more traditional types of fraud that you see in soap operas where businesses are failing, so we're just going to torch the joint. We don't see very many arson claims where people are caught with a petrol can in their hand anymore. And people need to be pretty sophisticated if they're going to set fire to their own business, especially with the likes of mobile technology and CCTV. There's always a window in the world somewhere and somebody's watching. So, the risk of being caught has never been great. And the same as car theft. People with cars that they could no longer afford to run, and how many torched out cars do we see around the place? You've got automated number plate recognition these days. The police can identify vehicle traffic pretty easily. So again, I think that's where it's become easy, more challenging for fraudsters. On the other side, when you look at insurance companies and how they've advanced and evolved and developed, and especially embraced technology, we go back to the days where Lemonade were writing headlines because they settled a claim in 30 seconds or something. All that's done is create some sort of arms race in terms of the speed and efficiency of claims handling. And where you've got claims handling that's got fewer touch points and fewer validation points, then there's greater opportunities for the fraudster. So, and that's where you've got the fast flow, your traditional low-level personal lines type claims, especially where you've got items specifically insured. They're absolutely, rich pickings for the fraudster because they believe that they can get through those processes and checks fairly straightforward, fairly quickly and easily. And the perceived risk of being caught is still small. These guys probably think, especially the ones that know the game ins and outs, so what's the worst that can happen? They can probably appear unclaimed and shamed. That's the sort of difference to where we are compared to 12 years ago.
I'd add to that in terms of thinking about where the industry is now compared to the last recession. There's been, I would suggest, a significant uplift in capability within the industry. If you think about the things that have happened since 2008, obviously the IFB was around. We launched in 2006, but it was even in 2008 relatively immature. It was still sort of getting there in terms of finding its feet, in terms of what it needed to be doing. But since that time, the industry is invested in the Insurance Fraud Enforcement Department. They've set up the Insurance Fraud Register. We've now got the Insurance Fraud Intelligence Hub. So the collaboration and data sharing is on a next level in terms of, I think, that experience and expertise has shown. We have a joined up industry counter fraud strategy focusing on the pillars of prevention, detection, and enforcement, which puts us in a really good place, I think. Now, that's not to say that there isn't more work to do, but I think we're in a much better place than we were back in 2008. And even in my time at the IFB, I've seen insurers insurers investing significantly in technology, fraud detection technology that is aiding them now and will continue to aid them. So I think that capability is much greater than it was back in 2008, and it'll be interesting to see how that then impacts what's being seen from a fraud perspective.
Martin, would you agree that there is a significant amount of kind of upskilling and an actually significant amount more kind of weapons, I suppose, within the kind of anti-fraud kind of fraternity?
Absolutely. Look, I've been in this industry now for 20 years, and we are talking very differently now about insurance fraud than we ever were. Stephen makes a fantastic point about where the IFB are, but not only where the IFB are in terms of their own internal capabilities to respond, but also where the IFB are in terms of their external visibility as well. I'm sure that Stephen will be able to tell us about the volume of cheat line calls, for example, and what they are like now compared to what they were previously. Equally, I think from my experience, I look at it and say that the questions that we are being asked as a law firm and as lawyers is a world different to the questions we were being asked by insurers 10 years ago. The questions we're being asked by fraudsters is completely different to what we were being asked 10 years ago. I mean, fundamentally, you were catching fraudsters by virtue of how many claims they'd had before. That question is not now nearly as prominent as what it used to be. And so, we're always having to evolve what we do. I explained it before, like whack-a-mole, that we have to take advantage of new technologies. We have to take advantage of the changes in the way in which we process claims as an industry, and take advantages of the supporting and surrounding technologies that we can bring to bear to solve the problems. But as long as we're always asking ourselves what the nature of the current problem is and what we think the problem is going to be of the future, and not focusing on what the problem was in the past, then we will continue to evolve and do our best to keep pace with the fraudsters as we try to respond.
Scott.
Yeah, I think just moving on from Stephen's point, in terms of how insurers have in effect bolstered their armory. I can go back to the days where claims handlers were trained on red flags, what to look out for. And then when they referred a case, it was referred into the fraud team in the corner, who were usually ex-police officers, who went out and started waterboarding. Well, they didn't go that far, but their investigation techniques were grounded upon law enforcement, and we had to train them on insurance, rather than nowadays where we've got more so insurance technical people who are trained in investigation. But the really important thing is that we've kind of maintained the red flag checklists, but we've tried to automate them. So you've got automated rule-based scoring, you've got social networking algorithms where software can identify track patterns and links between the people who are actually making claims and taking out policies. You've got identity matching, where people are manipulating their identity and their address. You've even got social media and internet lookups, where you can screen your claims data against the internet and social media on more of a bulk basis rather than doing profiling. Metadata analysis, where photographs, documents, the electronic exchange of information is such that we have more opportunity to validate cases than we have done in the past. And then you've got the more traditional methods, like looking at previous claims, and even if somebody's been added to the insurance fraud register. So if we can plug all of those items in at the front end of claim notification, then it means that the claims that flow through out the other end of that are, largely speaking, genuine, and the ones caught up are the ones that flow into the fraud team. So we've kind of not done away with the laminated sheets of red flags, but we're kind of using them, but bolstering it with technology, with a view in the future that will ultimately be the driving force of detection.
Can I ask, Scott, I mean, given what you've said there, has there been any issues during lockdown and going forward with, obviously, again, a number of your staff working from home, in actually bringing all this together? Obviously, when you're in an office, it might be easier to share information and talk to each other?
Yeah, we definitely missed that bit. So within fraud teams where, there are key attractors, there are certain solicitors, there are certain claims management companies, credit hire companies, and the like, that it's good to share information over a desk and have you heard of this particular company? And clearly we haven't been able to do face-to-face interviews. And we're still not doing face-to-face interviews in people's homes for obvious reasons. But probably by fluke rather than good judgment, before this happened, we've been using a lot more video technology in terms of interviews. And that's been a complete godsend, the ability to, in effect, operate in a relatively normal scenario. Now, you'll say that some investigators can't smell the fraudster the way that they can do when they're actually going out and visiting face-to-face. But most of what we've been able to do, most of what we're able to do as a result of lockdown has been pretty much replicating what we did before, with the obvious differences. What it has done, though, is it's created a real pace in amongst, trying to get new technology in, and people are responding to emails quicker, faster. It almost feels as if we're getting through a lot more technology and innovation than we probably would have done. And that's because we're not spending so much time traveling. So we're probably spending more time at work, and as a consequence, we're getting more done, and therefore pushing the fraud agenda probably harder than we would have done.
Scott. So Stephen.
I just really echo Scott's points in that regard. I think for me, looking ahead in terms of where does the industry need to go moving forward, it's looking at data. I think we need to get better at what data we're able to share in a collaborative way, and look at how we can, what the technology solutions there are that can deliver that quickly and efficiently. One of the big challenges that the IFB faces is, whilst we have a breadth of data that we can see across the industry, the depth of data in order to actually really get into identifying the correct networks and then looking to develop evidence packages to disrupt that activity comes from, we have to then work with insurers, and that's a manual process. So for me, the future is there's future opportunities around technology that exists now that will allow us to be much more effective at that.
Martin.
Yeah, I think that's right. I think there's a question. I think there's a question as well that's come in from the audience as well, which I think probably goes to the point about the use of data, which is the question I think was asked was, has GDPR hindered our ability to fight fraud? And I think I've made this point a couple of times, in that we've now got the GDPR, which is embedded into our frameworks by the Data Protection Act 2018. Beyond that, what we've got is some insurance-related exemptions that look backwards at the sort of activity that the insurance industry has been doing in the past. Can we, within the confines of GDPR and the Data Protection Act 2018, do what we've always done? We've never really asked ourselves, because the way in which that legislation was brought in so quickly, we've not asked ourselves, what is it that we're going to need to be doing in the future in order to really leverage the data assets that we have historically in the future applications, and in relation to developing the tools that allow us to do that. So I think this part of the question is always about utilizing the data we have, but trying to think about how we're going to work within the current regulatory framework, and how we need to continue to engage in part of changing that regulatory framework to allow us to be able to do those things in the future, all within the basic principles of looking after people's data sensitively, all within the confines of data ethics and data AI and AI ethics, but looking at actually how can we leverage data and technology better. An opportunity exists, I think, on the horizon with the current UK data strategy consultation that's ongoing until the end of this month. With then I anticipate the opportunity for the UK post-Brexit to reset its data privacy framework. It'll still need to interact with GDPR. We'll still need to interface there for data portability reasons. But I think there's an opportunity for the industry to look forward in its engagement with policymakers, rather than just looking backwards. I look back at that GDPR piece and the Data Protection Act, and it was set up in such a hurry in order to meet the deadlines around GDPR implementation that it was probably rushed.
So, first expanding on that, Scott, and to the question that came in from the viewer, do you feel that GDPR has hindered or helped the fight against fraud?
It produces us with a really good sense check and safety check to make sure that we're always acting legally and compliantly. As far as GDPR specifically is concerned, we don't see it as a hindrance on the basis of our investigations are largely speaking for the prevention and detection of crime, and they're proportionate and timely. There are certain grey areas when it comes to investigations, particularly around credit searches. When is it permissible to leave a footprint credit search? We take the cautious approach when it comes to access to information, and any and all of the software that we use, we will always have rigorously tested through our various data protection and legal teams. So it's certainly not a barrier. I think we find more of a barrier in some of our European countries where data protection and GDPR is almost thrown at you all the time as being a blocker to identification of fraud. But in the UK, it's not. It's just making sure that we are sensible and proportionate in terms of what we're doing.
Stephen?
Yeah, certainly that's my experience as well. Having done a bit of work in Europe now, is how remarkably locked down Europe is compared to the UK in terms of our interpretations of what can be shared and for what reasons. Certainly within the exemptions that are out framed within the detection of crime, detection and prevention of crime. So I wouldn't say it's made it more difficult. I would say it's encouraged us to raise our game, be more professional in what we do. The days of sort of nudge, nudge, wink, wink, here's a bit of information on the back of a fag packet are long gone. We need to be making sure that we're very clear in what we do, that our processing is fair and accurate, that we're only keeping the information for as long as we need to. This idea of hanging on to stuff just for the sake because it just might come in handy at some point. We really need to think about what we're doing, and I think that puts us in a better position to tackle the problems that we face. And certainly with the world moving to much more data orientated aspects, that's really, really important for us. So I don't see it as a hindrance. It certainly presents challenges. There's certainly some things that we need to really think about, but I think that makes us better at what we do.
So, continue this theme, and another question from the audience. I'll come to you on this first with Scott. The audience member asked, when investigating fraud, how do you record this so your colleagues know, but you aren't leaving evidence that the insured could request as part of a data subject access request?
Yeah, so that's a question that's linked to what we're seeing in the fraud world now compared to what we were in the past, because subject access requests were few and far between. Now they're almost used as a tactic, and we are picking up an alarming amount of subject access requests coming through now where the other side know that we've got good evidence of fraud, and we're going to be using that either in the first party or the third party arena. And the subject access request is almost to make sure that they can try and force us to show our hand. The best advice I could give is seek legal advice in terms of what you are obliged to and not have to show on a subject access request. You certainly don't have to show your investigation report, and you certainly don't have to show information that's legally privileged. So you do have to keep the two almost parallel, the investigation side of things and the claims handling side of things. But it's important that you take legal advice just to make sure that your procedures don't mean that you end up giving information away that could ultimately prejudice you further down the line.
Martin?
Yeah, you're going to struggle to find me disagreeing with taking legal advice, aren't you? No, I think generally speaking, we're, I think we find that we receive less of these, because ostensibly as a law firm, we're at the tip of the iceberg in any respect from the volume of problems that we're trying to deal with compared to the insurer. But also, everything we have is tends to be already protected by legal privilege. So certainly those enablers and lawyers who might be acting for a claimant or a data subject who might make a request, if they're going to do that, they will have done it much earlier in the process. So whilst we can lean in and support the general policies and procedures around this, I think most insurers have got pretty good data subject or data teams and data compliance teams, and will have a governance framework that will deal with the SARs fully and properly. You'll respond to them timely, but you will you'll look at each one on its merits. The problem is where you get them in volume, and it's about resourcing that, and that's going to be part of the challenge. But certainly pushing back early on ones that discourage that behaviour, I think will be important.
Stephen.
Yeah, I'd echo Scott's point about getting advice in terms of how you need to set that out in terms of your record keeping and your file management. My understanding is, as long as you flag, you annotate the files accordingly, that the following information is not to be disclosed because it would compromise an investigation. That kind of covers that, but you are best seeking advice. I think a word of caution from me would be one of the exemptions to disclosure of a subject access request don't apply if you're no longer investigating. So if you've investigated a case, you've written lots of interesting stuff down as part of your investigation, and you've got a case file, but you then decide to settle that claim and pay that claim, you cannot rely on the exemptions under the Data Protection Act to not disclose that information. So I think you need to be mindful about what you're putting down in a claims file, because once you've finished with that, if it isn't going to go into, if the investigation finishes, it's very difficult to then defend a decision not to disclose.
So, I mean, can I ask, Martin, you mentioned about enablers earlier, and I know that obviously the business interruption test case is ongoing at the moment. Do you think that this could, in a way, kind of act as a rod to help the enablers gain even more traction, over the coming months and the coming year?
Yeah, I mean, the problem is that you've got the fine detail and the granular detail of what the case is about, what the specifics of the case are about, what the actual nature of the decision was. I mean, just the confusion from the first case was that both parties claimed victory, right? So if you're going to think about this as you're a consumer, you sat out there, you're not looking at the detail of following this, you're not in insurance and you don't really care. Someone says to you that the insurance industry has lost a case in the High Court and that these business interruption claims are now payable, get your claim in. If you're going to follow the advice from someone who seems to know what they're talking about, and what we've seen across many lines of business now, certainly in the third party space, is that the general MO since introducing the portal, to my mind, has been for the claimant industry to simply throw their claims onto the portal and let the insurers work out what's a payer and what's not. Claimant lawyers are no longer validating claims in the way that I believe that they probably were do in the early noughties, when they were looking at whether they bother investing the time and effort into a claim because it'll be a payer. They simply throw it over the fence and let you guys do that, and that behaviour will continue and remain, because that is the nature. It's the kind of the same lemonade principle, I think, that the third party that exists in third party claims. It's this sort of instant gratification aspect of it. So put claim in, make claim, and one quick and easy decision, but make someone else do the legwork for it.
Scott, is that kind of behaviour that you're seeing at Zurich?
Yeah, I think if you just go to the heart of what claims management companies are all about, they're all about finding subject matter, whether it's whiplash, whether it's PPI, whether it's holiday sickness, flooding the market with claims, whether they're genuine or not, and taking their chances and benefiting from those that are ultimately paid. That's what they're doing, and they've you see from a where they're going next point of view, I think it's a bit unpredictable. We've seen some claims in for cavity walls, where the government-backed scheme to install cavity wall insulation didn't exactly go according to plan, but we're not seeing them in their droves. Will COVID and all the various knock-on effects mean that there's going to be the next big thing for claims management companies? We just don't know.
Stephen.
Yeah, I'd echo Scott's point. I mean, it's been flagged by a number of insurers to us with concerns around the case involving business interruption. What does it actually mean? It creates the confusion that Martin's alluded to. Is it creates clearly lots of opportunities for claims farming to be going on with the way the model now works. They can be generating money even if a claim doesn't get very far. They can be sucking people into unmeritorious claims. On the flip, this is a bit of a lose-lose situation, I think, for insurers. On the flip side, if a case is being thrown out because it's not covered, then the speculation from insurers is that will drive fraud, because you'll then start to see commercial property insurers looking at alternative ways to recover money for if they're not going to get it through as a result from their business interruption under that peril. They'll be looking for what the alternatives are. But it is all speculative at the minute. We've not seen a significant uptick in terms of this activity. I think it is all still in the mix to see what happens. But as Scott says, claims farmers are endlessly inventive about what they'll go for next, and they'll keep looking for what's out there and what's available.
Jonathan, can I just make a final point just on this? And it's something I'm conscious of time. With all the various restrictions around the country, it started off being relatively easy. You know, the whole country was in lockdown for a prolonged period, and everybody knew what was happening. Now it's difficult to understand what's happening right now across the various regions, let alone 6 months, a year down the line when you're handling a claim. And somebody says that they tripped in the street after falling out of a pub in central Glasgow. The question is going to be, at what point was the country at that particular stage? Should that person have been out, or is it a manufacturer? Maintaining a timeline of events and ultimately what's happening during this pandemic is going to help us further down the line. And we started doing that early and thought it was going to be easy, but it's far from easy. So I suppose, you know, it's a word of advice. The more detail that we can capture now about what's happening, the more it's going to help us in the long run.
I suppose it's a final question from an audience member, which I suppose is related to this in some way, and it's the idea that as claims get perhaps turned down, and rightly turned down, the insurance industry does get painted as the bad guys. And how do you strike the right balance between being robust in the face of fraud without perpetuating the myth that insurers do seek to avoid claims? And I'll start with you on this, Martin.
I mean, that's a great issue. I think when I've looked at the drivers of fraud, and one of the key drivers in terms of the sort of influence of behaviour is the rationalisation, and that rationalisation that insurers are fair game, and it's always been part and parcel of what we've been kind of dealing with, and I think part of the positive story that the industry has been trying to present in relation to fraud and the impact that I know a lot of the IFB communication about what the impact of motor fraud is on the motor premium and making that real for people has been to tackle that element of rationalisation. And COVID, I think, exposes this, and is being used to expose this. We've done some work in this area and produced a paper and a report, and in that I drew attention to just a series of articles in the Telegraph, which was painting the insurer as insurers were looking as a means of not paying, insurers not paying. And it's like there was a narrative in May through June, just in that paper alone, around this issue. And I think that will stoke the rationalisation of insurance being fair game again. And I think that's where we may end up after COVID, is that all the work of the last 15 years or so of moving insurers out of the fair game target line, we may end up right back there again.
Stephen, is that a concern you have?
I think it's a real a valid concern. I think the rationalisation argument is one that's been around for some time, and I think it's a really powerful one. And it's certainly my experience looking at the sorts of people that would sort of delve into opportunist fraud. They will rationalise the reasons for doing it, and the perception of insurance of not paying out is clearly a route to that. I mean, I think for the industry, we've just got to keep redoubling our efforts in terms of focusing on the fact that the vast majority of policyholders and claimants are genuine and honest. I think there's a danger sometimes of talking up fraud, and that can create the impression that there is so much fraud that it's okay to commit fraud. So I think we need to be careful to balance but both the fraud awareness side of things, but also making sure that we're reminding people that most claimants are genuine, most claims are legitimate and are paid out without any sort of challenge or issue, and that fraud is directly impacting those genuine people, because it impacts the operational costs for insurers that have to be passed on to them. So it's a case of, yes, I recognise that. I think that is a real danger, especially, and I've read the article that Martin's referring to in terms of the way the industry is being painted. So, but we've got to just redouble our efforts and continue the messaging that fraud is a problem for the genuine, and the vast majority of our customers are genuine, and therefore we need to act on it.
Finally, Scott.
I think when all's said and done, and we look at the company's results across the insurance sector, 2020 will be massively affected by COVID, and the industry will have ended up paying hundreds, if not thousands of millions of pounds. Inevitably, there'll be some businesses that aren't covered. But the main difference is, as soon as somebody starts telling lies, is dishonest, and submitting a claim that they're otherwise not entitled to, that brings it into a different team. And we generally think that the public don't have much sympathy for those that lie and cheat the system. And I think there's a big difference.
Okay, well, unfortunately, we've run out of time. So I'd like to say a big thank you to my panel, Stephen, Martin and Scott. Thank you very much for your time.
Thanks.
I'd also like to say that,
Thank you.
unfortunately, we were supposed to have Jeremy Trott from Ecclesiastical on the session, but unfortunately, as is the way in this world we live in now, his internet was down. So unfortunately, he was unable to join us. So apologies from Jeremy. This is the end of day one. So let's say a big thank you to our sponsors, the Chartered Institute Loss Adjusters, Davies Group, E2E Total Loss Vehicle Management, Kennedy's and Frisk. And for all you who have stayed and watched during the day, look out for the coverage on Insurance Post. And also to remind you that tomorrow we begin at 9 o'clock with a session Beyond the Digital Journey. Are insurers and customers ready for the next phase of digitalisation, and what can we expect? And finally, again, to remind you that, yes, the networking platform remains open. Please use it to network with all your peers. But until tomorrow, it's goodbye. Cheerio.